Good morning, my dear students. Very good morning. You're all welcome for the finance orientation module we are starting from MTI Academy. And this finance module and understanding of the concepts and basics is most important and relevant not only to the students of the direct stream or the domain of the finance world, but also rest of the streams also, because finance has such an important. Anyhow, let me brief about me. I have about 45 years of experience in public sector, private sector, and entrepreneurship, including some of the MNC organizations. And I thought it would be befitting to share my experience, which is not based from the textbooks, but from the experience, a rich exposure I gained from the interactive experiences on the grounds with the finance world in various senior positions I held. And you always remember that theory and practice are two different things. Theory and practice are two different things. And actually, when it comes to the application of the practice, and sometimes you have to understand the conceptual base and the basics of the finance in depth, then only you will be in a position to take a very good decisions in the world of the finance. Actually, today this financial literacy is the most important for all the streams, not only for the students, including some of those housewives who are also uh, confined to home, but this a literacy of the finance helps him to develop an in-depth insight for the finance world, so that one can also develop a confidence, and from that one can also do a small entrepreneurship, because today in the world information is very power. What is happening around? Where is the potential left? Where are the untapped opportunities are there? Whether you will fit there, whether I can fit there, whether I can pursue some a goal, a career in that, whether I can make fortunes. This is important. And basically, this finance management, it is a version, means version. And even it is discussed with very big universities like Harvard, Watson, and so many reputed international organizations are there. Not only from our IAM, Indian Institute of Management, and such reputed institutions. And in such a version, it is not possible to cover in a very limited time. But my humble attempt is there, an opportunity, an opportunity I wanted to create to understand this fundamentals of the finance, that is called what is a balance sheet, and what are the features of the balance sheet. Again, what are the fundamentals of the accounting. Again, how a financial statements are generated, how a financial statements are interpreted, how a financial statements are evaluated. That is important. Again, you remember this, again, working capital management. Actually, this working capital management is not a industrial subject. It is a day-to-day subject. Suppose you go out of the home, you require something to meet expenses. That is to work. What is working capital? In order to work, whether a freelance or in society or in business anywhere, you require a small amount from you leave the home and reach the home. In between, some expenses are required. In the world of the finance, this basic money required is called a working capital. This is called working capital management. This is in nutshell we can understand. But as you got the balance sheet is concerned, again it's a big science. A lot of science is involved. Again, what is happening in balance sheet is mainly liabilities and assets. Liabilities, what we have to pay others, and assets, what we have to receive from others. This is the basically, or what are my assets and what are my liabilities. Again, there is a lot of scientific aspects are there from the finance world angle. This various liabilities assets, what are their nature, and how to plan. Actually, what is happening now? This is called in life. One need to balance assets and liabilities management. There should not mismatch. Supposing I may be getting 100 rupees at the end of the month. But tomorrow I have to pay some 50 rupees. I don't have today, but I am getting after 1 month. That means a receivable is happening at the end of 1 month, but tomorrow a liability of is happening 50 rupees. This is called a liquidity problem. This is a small thing I explained, but in industry, this is a very, very big problem. Sometimes this problem goes in such a dimension as good as irregular breath to a human being. Supposing you take breathe inside and again leave breathe outside. That is called inhaling, exhaling. There is a scientific equation of this balancing is there. So also in life, this liability and assets, if this balance fails, sometimes it leads to disastrous things. So all these things, they have a rational approach, again a scientific approach, again it has application approach. All these things we can do. Again, how a balance sheet has to be analyzed, and apart from that, supposing the person wanted to do his own business about that a small project maybe even 10,000, 20,000 to 100,000 crores also. What the point? How a small project can be done? What are the fundamentals of that? How to do this project in order to get a finance from a financial institution? How to present? How to project? These are other aspects. And that apart, in every business, there are called internal and external factors. What are these internal and external factors? Supposing a farmer does an excellent work. Okay, he has sown the seeds and he has done an excellent farming work, but suddenly the rain does not fall in time. What happens? The rain does not fall in happens, and the whole his labor got waste. What is rain? This is called external factor. What is the internal factor? A management. I did wonderful work, farming work, but it did not click well. So on account of the external factor, that is otherwise called something like act of God, my whole business has collapsed. My whole venture has collapsed. These are the things. Like this internal and external factors, there are certain factors within our control. We are in control. It is there everywhere. It is there everywhere in business, in life, and everywhere it is there. Again, coming to the finance world, a lot of science is involved, a lot of what you call evaluations are there to read, to plan these internal and external factors. That is also there. Again, a due diligence is there. Supposing somebody comes to you, he wanted some hand loan. You need to do a due diligence. What kind of due diligence? Whether if I give him, whether I will get back. And what about his record? What about his track record? Whether in the past he has taken such loans and he has repaid or not. That is called due diligence. Somewhere, if he did not pay, or is a good person. Somewhere he failed, continuously failed. Even though he had the money, it is called a deliberate default. Then you can take a decision not to action. And finally, is a solvency. Solvency means a person at any time should be solvent, whether the liabilities, how much have to pay outside, how much have to get, and how much have to get is always should be more than the liabilities, and there's a lot of planning is there. All these things we can deal. These fundamentals and basic concepts under this finance management. To start with, after getting the total clarity, we can go forward. Okay, thank you. Welcome.